Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. My name is Simon Taylor, and I'm joined by somebody a little different today, somebody quite special. This is Pet Barisha. Pet is the GM of Tokenized. He also is the author and founder of Sporting Crypto, so if you care anything about where sports hits crypto, you should be checking him out. But as the man behind the scenes, the man who makes Tokenized possible, I wanted to throw it to you, Pet. Do you want to just introduce yourself, say hello to everybody, and explain why we're talking today?
Yeah, hi everyone. Thanks for having me. I guess, is that the right thing to say? Because it's also a show that I work on. I came together with Simon over a year ago to launch Tokenized, and it's been an awesome experience ever since. For those that might know, we also used to run a podcast back in the day together in the blockchain world, which is how we met. And yeah, today we thought, well, Simon's in the news a lot, which is kind of the first time it's happened. Kai's in the news a lot more. And why not put him in the hot seat? Because you have a new job. Why don't you tell people what that is?
Yeah, so I'm in go-to-market over at Tempo. And you may have heard of Tempo as the new stablecoin-focused L1 incubated by Paradigm and Stripe. I couldn't say Paradigm. Look at what you do when you put me in the hot seat. I got really, really hot. So aside from running FinTech Brain Food, being the host of Tokenized, and getting to FinTech NerdCon, I wanted to jump into stablecoins with both feet.
Yeah, it sounds like you need more than 24 hours in a day. That is quite a lot to handle, but great hire by Tempo and the folks incubating that. I think it's a match made in heaven, and it means that your worlds are colliding, because obviously you've been in banking, payments, consulting. You've been very much down the blockchain and crypto rabbit hole since 2015, and if not earlier. So this feels like one fell swoop in turning all your talents and direct them into a market that's exploding.
Yeah, I think the backstory on Simon, the law, if you will, the unknown law, was, I was the guy in 2010 who worked for a payments company when Stripe was two Irish guys with an API saying, hey, we should look at this thing, and was being told, no, that's never going to be serious. That's never going to be a big thing. And in 2013-14, I was helping organize some of the London Ethereum meetups, and the person inside a bank saying, hey, we should look at this thing, and then sort of became head of crypto R&D at a bank, whilst also still helping organize some of the meetups themselves. So I've always had one foot in both worlds. And through 2017 and 2021, I think I kind of became crypto's disappointed dad, always seeing just unbelievable potential in the thing. And to be fair to it, it's gone on and done all right. Some people involved have gone on to do really quite well. And in many corners now, it is an incredibly mature industry. But in other corners, it's not. And I think what I saw in stablecoins was the first time that veteran of payments in me saw, now we've got a shot. Now we've got a real opportunity to take this kind of mainstream. But there was this interesting tension in that stablecoins work if you can accept all of the risks and drawbacks of being in certain on-chain ecosystems, some involving a lack of privacy for financial institutions or occasional throughput issues. And on the other side, closed networks that are tokenized, like JP Morgan's Connexus or HSBC's or Citi's. Great if you want instant 24/7, but only in those closed loop. And what I saw in Tempo was something that was trying to find that line in the middle. And it's the old saying, you can please some of the people some of the time, but not all of the people all the time.
I mean, just going back to your crypto 2021 point, there's always going to be the party in the basement, someone smart once said to me. Most people have the sophisticated dinners out in the open, at restaurants, at your friend's house. There is always going to be the party in the basement, and no amount of regulation or enforcement is going to stop that. There is always going to be that person that person's friend's cousin's dog who goes to these underground raves that probably aren't legal, and they're always going to be around. But I do think that maturity is really, really important, and we're seeing it year on year and probably month on month now. It's really accelerating in terms of just how accepted it is within the walls of much more mature financial institutions, especially. So why don't we get on to ask you a few questions, pull up a few bits of Twitter discourse and so on and so forth about Tempo. I want to get your thoughts about it. Before we do, I just need to remind you that the views and opinions of the contributors, Simon and I, today are their own and do not necessarily reflect those of the companies that they are representing. Nothing we say should be taken as tax, financial, investment, or legal advice. To your own research.
You see why we have that disclaimer now? That's the reason.
Yeah, exactly. So I mean, look, like Tempo is not the first stablecoin or payment-based blockchain that has been announced this year or in the last couple of years. Codex, Arc, Plasma, and several others that I've forgotten to kind of bring up. Lots of really smart people are thinking that this needs to exist. Why?
I think fundamentally, payments need their own chain because there's a lot of things that TradFi did well that existing multi-purpose chains don't do well. One of them is really fast settlement finality. And another one is settlement reliability. So I need it to happen fast and I need it to be reliably fast. Now, there are amazing platforms out there that are incredibly fast. Solana's peak throughput is unbelievable. The challenge is, what's that like when a meme coin drops? And what's that like when you have certain issues? You also find if you want to bring the mainstream, and it does strike me that a lot of the industry community wants to bring the mainstream payments volume into crypto, not just for their bags, but to genuinely make the world a better place. Weird Silicon Valley Hooli vibes there. But, you know, like I think it's from a good place. If you want to do that, you've also got to build in a bunch of other things. Like you probably don't want to be acquiring a token like Sol or ETH in order to pay for the usage of the network. You want to be paying that in stablecoins. And so there are a bunch of these things that you can start to solve for those major high volume, high throughput, regulated institutions if you build this. And so, yeah, I'm not surprised that, you know, Circle's building Arc and that we're seeing Codex, which is a phenomenal project. Shout out to those guys and many others. And who knows what the right answer is? I think it's a great thing that we've got many people trying to get to the right answer. And then maybe we can build something that is ready for the world's payments volume, because stablecoins have all the potential in the world, but they're going to be the party in the basement, the party of the offshore transaction, the party for just a few cross-border transactions, unless we do some of the things that TradFi needs. Like, not everything that TradFi does is a bug. Some of them are features that are useful. And how do you find those tensions, those trade-offs about taking what's good about TradFi and what's good about on-chain ecosystems and finding some middle ground for that? And I found that a fascinating conundrum. And I don't know that anybody has the answer, but it's interesting to try.
I think that the purists will say that you have to use all of the attributes of a blockchain to be within the ethos of this community and movement in a proper way. But actually, if you look at the three biggest things in crypto, right, over the last 2-3 years, I'd say probably Base, Polymarket, Hyperliquid. Only one of those actually has a token. And so there's been a lot of like, hey, this is the ethos and values that crypto has, but like when you look at what are the things that have been really, really successful and in the mainstream, like Base currently doesn't have a token, Polymarket might do, even Pump.Fun didn't have one until recently, and Hyperliquid obviously does. But it kind of just goes to show that using every single attribute that makes a blockchain isn't a necessity to go mainstream and get like real usage. And I think that's a really important point to make, right?
I think that's a really important point, because a lot of people have framed what's happened here in the narrative they want it to be. They want this to be, you know, giant payments company has declared war on every other payments company and every other chain. And I can see why that suits them, but at the same time, really that's not what's going on here. It really is genuinely about trying to make those trade-offs. How do you find that sort of distribution versus neutrality tension point? Because Coinbase has a lot of distribution. Circle has a lot of distribution. But if they start just purely centralized, then they don't have a lot of neutrality. So where do you find that tension point? Do you try and get the best of both? Do you try and get some distribution and some neutrality? Because I think the benefit of neutrality, the benefit of decentralization is a couple of folds. There's two ways you can look at it. One way to look at it is to say, purely sort of technologically and from a business-minded capitalist standpoint, I don't want to be locked into any platform. I want there to be multiple operators of this thing so that A, it's more resilient, and B, there's no one central actor that can control the thing, and therefore the governance is always moving. There's some fairness to that, and I think some ethos to that serves a business purpose and kind of an overall purpose. The other way you could look at it is to say the reason you want decentralization is because decentralization is going to be the thing that remakes the world, the anarcho-capitalist position. I don't know if I've ever been of that persuasion, and I don't know how much of crypto really is. And so if you get religious, if you get dogmatic about that, I can see why, because being religious and being dogmatic about that has achieved some amazing things. I don't know that we'd have Bitcoin if we didn't have people that thought that way. But at the same time, the way you do it might not be the best answer. I might argue that, one of the best things that happened to Ethereum has been Base, right? Like some of the innovations you see in that chain are helping drive the roadmap of Ethereum itself. So, these things are constantly in tension.
It's a spectrum, and the religion analogy is even within the same religion, you have people that follow those religions more strictly than others, right? So like there's a spectrum, and then there's a spectrum within each religion, and so it's very difficult to kind of ascertain what's the actual temperature check on people within this ecosystem or that one on this new piece of news. Because I mean, looking at it from the outside in, it's been received in a way that like none of the other announcements on new stablecoin issuers or new stablecoin chains has been, and that's been pretty interesting to watch. Before we get into some of that, like, do you want to tell people a little bit more about your role specifically? Like, if they're listening right now and they're thinking, oh, that's cool, I should talk to Simon about it. What are you actually doing?
So I don't know if I've ever fit a job title fully. So go-to-market is probably it, right? So I do a mixture of everything from I can help connect you to potential leads and customers. I can do marketing and brand and awareness. I can act as a stand-in occasionally to talk to media. So there's that side of go-to-market. There's also working directly with clients and prospects and problem solving and design partners, especially when it comes from the TradFi world. And I'd say if there's one thing you could probably say in a sentence, it's I'm the TradFi translator. I can tell you what it's like inside of a financial institution and what they're hearing when you said that thing and how to reframe it so that they hear your intent. So I'm that translator in between. And then also the other way around as well, I'm sort of able to talk fintech as well as banks. So when a fintech company has an issue, they're going to be thinking about it very differently than a crypto native might versus a financial institution might. And I span those ecosystems. So hopefully I can be a useful North Star and then feeding all of that into product and engineering and what gets built. So I don't know what that job is. It's just broadly go to market, but I enjoy it, and it's sort of what I did at Sardine, and it's sort of what I always end up doing, and it's a lot of fun for sure.
Yeah, I mean, your emails, DMs, and messages must be a mess because I'm getting people messaging me that they have projects that they want to connect Simon with, and I'm like, what can I do? Like, I'll put you on his list, and there we go. But they are like real companies. I'm talking like a huge sports federation and also a huge loyalty company. Like these aren't like small crypto projects that want the leg up. It's serious stuff.
Well, and I think, look, let's be honest here. Everybody's going to want to take a look at the new thing. But the proof is in the pudding, as we say in the UK. The proof is in the volume. Can we actually deliver something that what actually excites me is the people who are building apps today in B2B, P2P that are using other chains that have concerns about those chains or that feel the drawbacks, feel the issues, that would decide that Tempo is such a better product for them, they want to run their volume on there. And they will hedge with other chains, and you absolutely should. You should never get all the way locked in. But that if it is the best product for you, then we've done our job well. And you will see that in the volume. And let's be honest, we've not launched testnet 1 yet. So it's going to be January of next year, which is the current plan for mainnet, before anybody knows if we've succeeded or even we know if we've succeeded. But I think there's some pretty cool, compelling ideas in there. And I'm really, really thoroughly enjoying working with people who see the potential for something that could have enough momentum that we could really meaningfully shift the market structure of payments to be something, yes, better, faster, cheaper, but also fairer and more inclusive. And my God, the engineering challenge is enormous to be able to do that.
Right, well, why don't we get into, look, there was a lot of criticism and praise, and I was actually going to ask you, hey, what is fair that's being taken into consideration, and what are people missing? Is there anything that jumps out to you when you're reading all the tweets and all the blog posts and all the articles that you're like, I don't think they quite get that, or like, fair, yeah, we should talk about that more internally?
Yeah, so I think the fair stuff was just people didn't understand the nuances and everything that's there. So there's probably like 10 different examples where it was just, there was Matt's tweet and a blog post to really go off. There wasn't a lot of detail. And I think some of that is just because it's kind of early, frankly. That is fair. Another fair one I would say is, why haven't you given more detail? Well, it's early. That's why we haven't given more detail. Why didn't you nail the comps? Well, because it's early. There's a lot of things to do that I think fall into that it's early category. There's other ones that are sort of somewhere in the middle, which are design choices. There are intentional choices that have been made where maybe it's not what somebody else would have done, but it's what the Tempo team has chosen to do because they've made a different trade-off, and where there seems to be a lot of emotion when people have decided to do one thing instead of another thing. And that's the one that I struggle with the most, which is to say, okay, I can understand that you really, really care about this, but I can honestly say that A, again, it's still really, really early, so things could change. But B, why?
That's a question that will never be answered. I mean, like if you look at all the co-founders of Ethereum, they all went and built different infrastructure layers that all do things in a very different way, and they still to this day argue about it now. So I think people are always going to be angry at anything that is slightly different, that doesn't kind of match their worldview of like how this thing, which is still a really nascent industry, should be done.
Yeah. I think that the idea that it's declaring war is the thing I disagree with the most. Like, no, it's not declaring war on anybody, with the possible exception of payments that don't work. And I think possibly the biggest misunderstanding is there's a lot of crypto natives that have never worked in payments. And that to me is the nub of the issue. In payments, it is perfectly normal to build market structure to compete out cost. In payments, it's perfectly normal to have multiple payments providers so that you don't get lock-ins. For example, canonically, Shopify used one specific payments provider historically, and they're the case study client for Stripe. But now they use multiple payments providers. And that is something you should do for resilience as you start to scale your business. Like, you should get to the point where you never have just one answer to every question. And I think that's a part of like ecosystem maturity. Like, I'm from TradFi, where everybody is your frenemy and everybody can be a great business partner, but there are areas of your business where you compete. So the crypto world of this is war just seems really immature to me. And it's something that perhaps When there's a lot of money on the line, I can certainly see why people feel that way, but it's not the way I feel.
I do think, though, that frenemy thing is happening more and more in the crypto world, right? If you look at how, like, Coinbase and Kraken and every other big exchange have always just been exchanges, and they've competed on volume and liquidity and getting to market first with a specific trading pair, and they've done regulatory arbitrage. But like now, they are now competing with the banks and Robinhood and Revolut. And also those companies are now competing with Hyperliquid and other dexes. And so you are seeing that like people are, the fragmentation is happening because of competition. And that is not going to be any different in payments, stablecoins, whether it's issuance or actually like throughput of payments themselves on these stablecoin chains. It's going to be the same thing. Now, where that kind of lands up and how that these worlds look in the next 5 to 10 years is anyone's guess. But directionally, we're seeing more competition because this space is getting more real. And so like, it just makes sense that, yeah, like there's going to be a world where a Circle and a stablecoin chain work together, but Circle also have their own stablecoin chain and they also have CPN. And so it's going to be weird, but also interesting to watch over the next 5 to 10 years, and the winners will win.
I think there's that tension of finding credible neutrality. And what does credible neutrality mean to the market when most of the market is not here yet? And there's the classic observer bias. I view the world this way, therefore that's the way the world will view it too. And actually, if you're in crypto Twitter, most of the world doesn't look at the world like you do. Most of the world just wants things to work. That doesn't mean you should give up your ideals, nor should the idea of credible neutrality be given up. But it means that the first step towards it, as you were saying earlier in the show, might not be mass-scale decentralization. It might be stepping stones towards it, which, again, as you said, many projects have succeeded in. So there is this idea that I think, well, the incentives are too great on you. You're never going to decentralize because, and I think there is a lot of understandable cynicism about that because of like there's this assumption that everybody saw something and it looked like a duck, it walked a bit like a duck, and they went, well, it's obviously that. Like this is, and they had this thesis that fit, and so they pattern matched the new news onto the thesis that fit, not what the team was saying, not what the team is trying to build. And so then I think when Matt's tweet comes out, people go, oh, no, and there's this cognitive dissonance. And I think that'll dissipate as the team starts to build. So you do need that sort of credible neutrality that is decentralized enough so that it's resilient and no one party controls it, but also fast enough that you're not waiting minutes or long, even 10, 20 seconds for settlement finality. You need to find that tension. And this is an attempt to do that.
And there's, there's been a lot of discourse around this. And I've got like 5 or 6 tweets lined up that I just wanted to go through with you because I thought it would be a funny exercise. So I'm just going to share my screen. I mean, the first one is from a friend of the show who you interviewed at Avalanche Summit, Hasib from Dragonfly. This was a quote tweet to a pretty long tweet from Matt Huang at Paradigm, which I won't go into right now, but Hasib basically said, in case you missed it, here are the comments on Tempo in a nutshell. Bitcoin, this is another VC chain. Ethereum, why not an L2? Solana, why not on Solana? Cosmos, this makes sense. And Avalanche, this makes sense and should use Avalanche. He says crypto is the best. And that's kind of some of what we're getting at here. I found the really interesting thing here about kind of everyone pointing to a Robinhood, for example, and saying, well, those guys have done an L2 and that's what they're building. But like, if you read reports, they weren't necessarily set on that. They were considering Solana and they were considering other chains. And so like, any corporation that launches a blockchain from this point on is going to consider all the potential infrastructures. Like that is just case in fact. And because they considered one marginally over the other doesn't mean they fit into any of these categories that people want to box them in via crypto Twitter. And
that's a crucial thing. What Robinhood has done is Robinhood is building an L2. What's happened here is a new company has been formed with help from Stripe and Paradigm. But it is a new company. It is a separate operating company. And so it's a different thing. I think that's possibly the biggest myth, which is, company A is building a thing in the Robinhood example versus new company has been formed with the benefit of some of its parents' distribution. Like, those are two fundamentally different things. And sort of looping back to your point here, I mean, this is the core of it for me. Haseeb absolutely nailed it, which is, whatever you thought before this becomes the reason why it's true, rather than being judged on merit, or at least in the first instance. There's something on social that pretty much everybody does called attention surfing, which is everybody's talking about that thing. So I'm going to talk about that thing and direct it towards what I believe in order to get more attention on what I believe. A lot of that going on without question, and credit to you, engagement farming works and it's very effective.
It's also very hard to find the signal from the noise. And actually what you find, the longer you wait, the better the kind of analysis gets on specific things. And actually that always happens, right? Like news breaks, everyone is trying to piece together a thought, an opinion about it. And then you get like 2 weeks down the line and you start reading essays and analysis and so on and so forth about X subject. And you start to form a much more informed opinion because people have had time to take a beat and think about it more, right? This was another really good one from a friend of the show, Morgan Krupetsky. I hope I pronounced that correctly, Morgan. This was a response to Ryan from Bankless saying, why an L1 rather than an L2? And Morgan, who is over at AVAX running kind of institutional and capital markets, said, sub-second transaction finality is important in general, but especially important for payments and other high-frequency or high-value transactions like those in FS. The ability to use a custom gas and staking token and therefore create actual value and utility in the latter and not have to sell down your token to pay high or volatile rent back to Ethereum. The ability to totally customize your gas and transactions cost parameters, the ability to isolate the performance of your network from load generated by unrelated chains and applications. So that's kind of what you were, the example with the superhighway chain like a Solana. If it's clogged up because of a meme coin launch, that could mess up a high throughput payment event like a huge conference or event.
I shall keep the names anonymous, but I'm aware of a very large company whose payroll was delayed by a meme coin launch, and people missed rent.
Amazing.
And so that is something that, with my TradFi hat on, is like red alert, game over, like get the CEO in the room immediately, the media are going to be calling you. Like, that is mainstream news times 100. That's real world impact times 100. You cannot have that if you are going to go mainstream. And I think this is what Patrick Collison's tweet and piece on Hacker News was about, which is the rationale that they have is like, they really care about high throughput. In their core business in Stripe, they really care about throughput because they're a payments business. And so if you've operated in this industry, you've kind of got some of those scars on your back, and you know that resiliency is everything and consistency is everything. So that's a point that I think gets lost quite a bit. And look, shout out to Morgan here, makes a lot of great points. And I think, the answer's not the same for everybody, as you said.
Yeah, she then goes to say enabling a multi-party validator set beyond a centralized sequencer and expanding that as you see fit. Again, that's kind of
an interesting point. People forget that L2s have a single sequencer. That is a single point of failure. Maybe that's not an issue for you. Maybe that's not credibly neutral. Again, design choices. There are different choices to be made.
And, we were talking offline, we were talking exactly about this. And I said, actually, the L2 ecosystem is pretty young, right? Like, Base has been around for 18 months, Polygon 4 years. Like, as you said, the Base success has had an impact on the roadmap of like how L2s mature within the Ethereum ecosystem. And like what we see now with as you said, the single sequencer issue might not be something in 5 years, but like based on what there is now for a whoever is launching a chain, whether it be a consortia or a specific corporation, they need to take it at face value now, and they need to say, this will have the throughput that I need, and this will have the customization and modularity that I need, rather than like it will have it in the future. And so I think that's also a key thing, right? And Morgan finished it with like, why not an L1? And I think it's a pretty persuasive argument. Like, again, like, you know, you've got your Avalanche, Cosmos, and Polkadot, and you've got your L2s within Ethereum, and then you've got kind of like a lot of super highway chains like your Solanas and Swedes and so on and so forth. Like, they all have benefits, and for some things, they work better than others. And in this instance, I guess Tempo have chosen to go with their own L1.
I often make the joke that crypto is one big weird family that most of the time acts like they don't get on, but they still get together every Thanksgiving and agree to do the same again next year, probably at some conference.
This was from Vasily Shapovalov. I'm hoping that I've pronounced that. I actually don't know Vasily. He, in his bio, it says the ticker is ETH. So I'm presuming he's in and around the Ethereum ecosystem. And he said, regarding Tempo, Matt speaks true if you want your chain's finality fast, your sequencing decentralized, you have talent and money to support the tech stack, you have user funnel that's not dependent on crypto Twitter approval. You technically can be an Ethereum L2, but it's not compelling. There's a lot of dependency to manage both on practical, technical sides and on the social side. Just the constant crypto Twitter purity tests will be very exhausting. What I think is left unsaid is that Paradigm has an incredibly strong and I imagine very expensive blockchain engineering team with Georgios at the helm. So they were in a bit of a solution looking for a problem mode, parity in 2017 situation, but with awesome business partners. And he then went on to say, seems like the way to change the situation is pretty straightforward. If not easy, it's making a fast, interoperable, decentralized sequencing L2 stack that is easy to deploy. And this is really interesting from clearly someone that's within the Ethereum ecosystem, with what I think is an excellent tweet.
Mm-hmm. Yeah, no, look, it's just making the case for it, which this is technology stuff that's well above my pay grade. I wouldn't dare to say I've engineered enough to be able to do it. But, if you speak to Georgios, I think there's a real love of the Ethereum ecosystem from that whole Paradigm team. And there's a real desire to support that ecosystem. Certainly that's what I've seen. But there's also like a lot of engineering that helps you get this throughput and this speed that payments need. So, Vasily is talking about one perspective. I see it from the perspective of payments have this requirement. Like, if you're going to get to mainstream payments, you need performance throughput that is reliable, and you need to be backwardly compatible with some of the features of TradFi, maybe not all the bugs.
I like the backward compatibility point. I think that's probably under discussed, apart from on Tokenized, obviously. This was from Stone, who I think is booked for the show at some point later the year. And again, I don't think it got picked up, but I really liked it. And he just went, Libra was brilliant and early. Timing matters. And a lot of the discourse I saw was, this is Libra 2.0. And there's a really well-documented thread, an article that's been posted about it, which I think is actually really good to read. But I think if you go back and read some of the things about Libra at the time, and also what they were trying to do, like, some of it has happened at this point, right? Like, their idea to use a basket of stablecoin goods plus gold plus something else as a stable currency and use it on Meta. Well, like, what Tether and Circle have done is just, in Tether the basket, it's $1, and then we're using euros, and then we're using Aussie dollars and British sterling, and then we're creating on-chain FX on top of it.
And increasingly that might become gold and Bitcoin, right? Like, the idea is not that wild today, now that we're seeing currency deflation, now that we're seeing, just a different macro environment. But the other thing that's different macro-wise is we're not in the midst of a Cambridge Analytica scandal. So, timing-wise, there's that. And then also, when you have 2 billion users and you get together like the Thanos ring of other companies, then you are going to create a sovereignty risk for countries that have, populations of less than 100 million. And
Really
there's
true.
something that's already very, very high level of concern in many parts of the world is the level of impact that the US administrations and tech companies can have on the rest of the world. And so we've called that, like you've seen this frame of de-risking start to take over. Europe is actively trying to build its own digital currency and actively trying to build its own alternative to Visa and MasterCard. And I've blogged about like trying to do that central top down and it not always working. But you can understand the fear, the threat, if you are from sitting in their shoes. It's not like somebody else's perspective is benevolent to your own. It's not like their interests are benevolent to your own or in your own best interests. So you should potentially look at doing something about that. This is obviously very difficult to pull off no matter what they did right, it was always going to be incredibly difficult to pull off in that timing. Whereas now the world has Bayesian updated. We have a law in the United States that is on the books for stablecoins. That is just unbelievable. And we're probably not far from a market structure bill. If both of those two things happen before the midterms, then that changes everything for the foreseeable. And then the question becomes, how do we bring all of the benefits of this whilst keeping the features that we like of crypto and the features that we like of on-chain finance and the features of TradFi and the things they got well, whilst setting aside the bugs of both? I've always been a believer in that there's got to be like this in the middle of the Venn diagram is going to be our sweet spot, but there's not a linear path to it. We're going to have to innovate our way there.
This one was from Austin Federa, co-founder of Double Zero. I think the former strategy at Solana as well. So interesting perspective from someone in one of those superhighway infrastructure businesses or formerly of them. He simply says, agree to disagree or disagree. The problem of we can't convince our partners our single sequencer will act neutrally if we do an L2 is a legitimate business concern I haven't seen a real solution to from L2 advocates. As far as I know, MegaETH is the only one talking about rotating the sequencer. What other frameworks have been built out? So again, really interesting. This was a quote tweet to Matt's long thread on permissionlessness and L1 versus L2, and basically discussing why tempo has gone one way rather than another. And I just thought this was a really interesting perspective on, again, talking about that sequencer issue, which has kind of added some weight to the decision that the Tempo team has made.
Yeah, look, there will be many other technical arguments, pro and con, but it is interesting to me that the first 24 hours were sort of dominated on the timeline by one response, 24 hours later, another response, and it's getting thoughtful, and long may that continue.
The last one is from Fubar, a really popular crypto Twitter account, does a lot of good tweeting, and this was more of a kind of like macro, let's have a look at like what Stripe have done here. Privy acquisition, Bridge acquisition, partnered with Paradigm to build out Tempo. So you're talking wallets, Rails, settlement. And he says they even made an image, which was pretty good. And then this was an integrated tweet by Nick from Agora about Stripe's need to move fast as they can before their partners become adversarial. Unsure if I totally agree with that. But again, really interesting discourse and discussion around kind of like the more macro part of this. And, talking about kind of banks getting debanked, the whole JPM Plaid open banking API stuff. We're in a really interesting world right now where we're talking like everything that you write about and analyze, Simon, like coming together in one fell swoop, and the puzzle pieces are moving around to create a new picture. The chess pieces are moving on the board. It's just really fascinating to see this come to fore, and it's happened really quickly. Like this that Stripe has done has all happened over the last 9 to 12 months or just a bit longer. And it's exciting times for the most part, I think.
I'm unbelievably excited. Look, I mean, Fubar, great piece here, talks about Georgios and the team and some of the clients a little bit further down in this thread, I believe, and the building of Reth, I think it is. If you scroll past this just a little bit, an L2 could probably do the real core issue that nobody's focused on in Ethereum is the speed of development. A single paradigm team has lapped nearly all of Ethereum's existing infrastructure. Porto crushes 4337, Reth destroys Geth, and many recent EIPs have been handled by him. Now, look, this is Fubal's opinion. I'm sure people could make technical arguments the other way and credit to you. The point is simply, though, as I zoom out from that, which is what do payments need? They need performance. They need that speed. And if we do have somebody that's actively creating EIPs, that is somebody, I believe, a personal opinion on anything, I don't want to speak for the guy, but and a team that is trying to contribute to the broader Ethereum and EVM ecosystem. So this is why I talk about that crazy family that gets together at Thanksgiving. This is definitely not declaring war on anybody. This is trying to make the ecosystem a little better and trying something new. And let's try that new thing, because what I'm incredibly excited by is that I can see the desire of some massive, massive volume players to get this right, but they all agree on one thing. Nobody got it right yet. So let's have a go.
Yeah, and I think it's really interesting to read this, but there's also because of the neutrality and decentralization that Ethereum as an L1 has, that obviously makes the upgrades, the feature additions much more difficult, right? If you imagine like the difference between a small, highly skilled group of devs building stuff and just deploying at a smaller scale versus like having multiple clients, devs around the world, having to reach consensus around like upgrading a specific thing and then doing on testnet and then doing on mainnet, that is like a huge undertaking. And it's amazing, by the way, like the fact that like Ethereum has gone from like experiment to one of the biggest like distributed networks that we've ever seen is amazing. But like, if you're looking at this from the perspective that the Fubar's just put down, like if you're Stripe, you've just acquired these two companies for not insignificant amount of money. You want to be a real player within the space. You see the opportunity, but like the kind of existing infrastructure doesn't really work perfectly for you, and so you're incubating something new. Like only time will tell if that's correct, right? Like we will not know for a long time, as you said. Even mainnet going live in the new year, we will not know for a while until whether the decisions they've made are like correct or incorrect or like somewhere along that spectrum, and that'll be dependent on volumes that flow through that infrastructure, right?
Absolutely. Dude, I think I got to wrap this one here. This has been a great conversation with you, my friend. Thank you for jumping on with me.
My pleasure. First of many, I hope. And that is what we've got time for. You can find me at Pet Barisha on Twitter, BERISHA, and LinkedIn, and on sportingcrypto.com. Simon, where can people find out more about you?
SY Taylor on Twitter or on LinkedIn, because, you know, TradFi is going to TradFi. You can find me at fintechbrainfood.com, where I just spoke about AI and fintech and embedded finance. So I do have other fintech things going on. And of course, fintechnerdcon.com, because I've got a lot of things to actually shill these days. And I do hope that people will like and subscribe wherever they get their podcasts, if it's on YouTube or Spotify or Apple. Go ahead and drop us a review. It means a lot.